Stocks Room right here on ET Now. I'm Ashesha and we are building on from strength to strength in trade today. In fact, Nifty is now sitting with gains of nearly 218 points as we speak. Remember, this comes in the backdrop of the kind of downtick that we had seen yesterday. In fact, Nifty yesterday fell nearly 130 odd points. Nifty Bank, meanwhile, that one has also shot up 300 points to trade above that 58,400 mark. In terms of individual sectors, Adani Enterprises, on the back of that 25,000 crore rights issue that the company has announced, that one is up 5%, the biggest gainer on the Nifty 50 index. IndusInd Bank, Tech Mahindra, TCS, Adani Ports, all of these stocks are gaining in excess of 2% in trade today. But shifting focus to one stock that is gaining a lot in trade today, let's talk about Yatra Online. In fact, the last time I checked, the stock was up nearly, it is still up 14% as we speak. Numbers were very strong. They've gone ahead and raised their EBITDA guidance for the rest of the year. And to understand what factors is leading to the growth and whether the momentum will sustain going forward, we now have Mr. Dhruv Shringi, whole-time director come chief executive officer at Yatra Online, now joining us. Mr. Shringi, afternoon. Ashesha, Dissai, thanks so much for joining us today. And you've reported very strong set of numbers for the quarter gone by. In fact, profit has nearly doubled on a year-on-year basis. And you've also gone ahead and raised your EBITDA guidance. If you can take us through what makes you so confident about achieving this growth and what factors are likely to aid for the company?
Firstly, good afternoon to you and all your viewers, and thank you for having us on your show. Our business has been, very strong for the last 4 or 5 quarters now. So this is not just a recent phenomenon. We've seen very strong tailwinds behind business travel. And more specifically, what we are seeing is that large number of companies in India are trying to digitize and automate their business travel process. Not only does the automation streamline the process, it also helps save cost to the consumers and save cost to the organizations. And at a time like this, where profits are under pressure, all companies are saying how do they go about saving and optimizing their spends. So on the back of that, we are seeing very strong demand. We've seen a very strong pipeline on the corporate travel side. And that pipeline, as it continues to get implemented, given the good operating leverage in the business, it's translating into very healthy profits for us. On the back of the pipeline that we currently have as well, we've been able to raise our guidance for the full year also for an EBITDA growth rate of now 35 to 40%.
And since we are talking about corporate client additions, I believe you added 34 new corporate clients in the quarter gone by. Any other new additions that are in the pipeline for the next few quarters that could significantly contribute to your revenue growth?
So we continue to carry a very strong pipeline. There are a large number of corporates that we are currently in final stages of discussion with. So we will continue to see this momentum for the next few quarters, for the foreseeable future, right? I don't see any slowdown really happening in that because, this wave of digitization of corporate India that started coming out of COVID, right, during 2023, 24, is only strengthening. I think more and more companies have realized that they need to automate their business processes. So I don't see any slowdown in this in the near term.
You expect a momentum of corporate client additions to sustain going forward. But as far as your air passenger volumes are concerned, that saw a decline of about 3% YoY, despite gross air bookings rising 12%. What led to this divergence, if you can take us through that?
Sure. So what we've looked at doing is, optimizing our own portfolio of travelers as well. So there are some areas where we've seen a slowdown in international travel. And this has been largely on account of the geopolitical tension which was going on in the Middle East for the last few quarters. So on the back of that, we saw business travel, especially going towards the West, which is impacted by the high prices, be slightly muted on the international travel front. On the consumer side, what we've tried to do is also optimize our portfolio when it comes to looking at, low value tickets. So the focus is on looking at higher value where margin realization is better rather than just chasing volume where margin realization and profitability might be low.
Understood. And now that the outlook is very positive, we are in the thick of wedding and festive season. What will your revenue guidance be for the third quarter and for the full year? So I was going through your numbers. You have generated about 550 crore of revenue in the first half of the year versus 800 crore that you reported for FY25. Do you expect to report 1,100 crore revenue, or could that be higher?
See, we would expect revenue growth to be at least, for the full year, average more than 25%. So it's quite likely that the numbers that you're saying, we should be able to cross those thresholds. Uh, Quarter three seasonally is a slightly slower quarter for us because for business travel, you've got the Diwali, Dussehra holiday, which takes away 15 days of the quarter. And then you've got the Christmas, New Year break, which takes away another 15 days. So business travel is relatively low during the third quarter. But then again, the fourth quarter has very strong momentum, just because companies are striving hard to achieve their overall targets, sales targets. There is pressure to travel to be able to generate more business as the year comes to an end. So we will see a slight slowdown in the third quarter, but then acceleration again in the fourth quarter.
Understood. So now, since you're saying that 25% revenue growth is what you'll report for FY26, do you maintain that guidance for FY27 and beyond as well of 25% top line growth?
See, we aren't giving out full year guidance as yet. We will do that towards the end of the fiscal year. But needless to say, there is strong momentum in the business, and I don't really see any change happening, right? I only see positive news coming out of it. So I remain bullish on the business.
Continue to remain bullish on the business. Meanwhile, I was going through your margin profile, and that has been very volatile. This quarter, it has come in at 7% versus 11% in the first quarter. This versus an average of about 3 to 6% some couple of years ago. What is leading to this volatility? If you can throw some light on this.
So part of that volatility actually stems from the way MICE business gets accounted, right? From a new accounting nuance point of view. So in the quarters where seasonally MICE is strong, you will see margin being lower. But the way we guide our investors to look at our margin is to look at this as a margin of EBITDA to gross margin. And EBITDA to gross margin has been consistent around the 20-21% mark, in that range only for the last three quarters. That has improved from about 11% last year on the back of the scale up of the business and some optimization work that we've been doing. But for the last three quarters, we are consistently around the 20% mark.
Understood. So that's as far as the MICE business is concerned and its impact on margins, because of which margins look very volatile. But as far as segment-wise performance is concerned, which segment you think will drive growth going forward, not only for the second half, but for FY27 and 28 as well? Will it be the flight booking segment? Will it be hotel and other packages segment?
So flights will, grow. Obviously, we expect flights to grow maybe between the 10 and 15% mark, but we expect hotels and packages to grow upwards of 25-30%. And that's got to do more with the penetration of each of these from an online adoption point of view. Flights have a much higher online adoption, upwards of 70% as an industry, whereas hotels are still around 25 to 30% online adoption. So we will see faster growth happening in the hotels and packages segment. But flights, given the size and scale of that franchise, will still continue to be a meaningful contributor, growing at about 15%.
Understood. And total transaction volumes, meanwhile, have risen by just 1% YoY, but revenues have grown substantially. If you can tell us what led to this divergence?
So this divergence is, again, as I mentioned earlier, it's got to do with us focusing on more higher value transactions and higher margin transactions. So we've given up certain low value transactions which might be coming at a negative cost of acquisition, but focused more on acquiring customers who have higher transaction value, which allows us to be able to also scale up profitably. So we are chasing better quality as opposed to just pure quantity.
Okay, so the outlook remains very positive, 20% revenue growth. Margins are volatile, but that's because of the MICE business adjustment that you've been reporting. Mr. Shringi, thank you so much for taking your time out and joining us here on ET Now this afternoon and helping us understand what the outlook is. The stock, remember, is up a solid 12.5, 13% in trade on the back of very strong results and on the back of guidance that the management has revised upwards. We need to slip into a very short break, but we'll interact with many more managements on the other side. Stay tuned.